Okay, let's begin. Welcome. My name is Gavin. Welcome to our weekly market analysis. And the key point is, has the US inflation peaked? That's sort of the key question that we're going to discuss today. But let me just do a quick sort of introduction. My name is Gavin, head of trading at Alphachain. This is a live webinar that's open for all, so please feel free to ask questions in the chat, in our private members chat, through Zoom or through the YouTube channel. It is Monday, the 15th of August. It has just gone past 11:06 a.m. We're going to do a weekly market review. So let's have a look at the economic calendar so that we can get started. So what I like to do is cover what took place in last week's trading session, sort of key outcomes that we can take away that could help us build great ideas going forward. And of course, what to anticipate for the week ahead. Again, what are some of the high relevant areas that I'll be looking to focus on when it comes to trading the markets. Okay. So coming over to last week, let's just ensure that we're on sort of last week. Let me just zoom in as well so you can see quite clearly. Okay, last week there was only sort of one key outcome the markets were anticipating. So last week was probably the first week that we've seen where the data was widely quiet. Okay, so it was the first week after a number of months where we had very, not a lot of data to be released. The only one that was anticipated was, of course, the CPI data. Earnings are starting to wind down, so there's not many earning results that came through. There's a few, of course, but again, it was winding down. So we're in the tail end of earnings season as well. So the beginning of the week was mostly quiet, as you can see, sort of Monday, Tuesday, mostly low impact news across the board. Okay, going on to, I'm just review this here as well. Yeah, so coming into Wednesday was the key focus. Okay, so there was two sets of CPI data. One was released in China, and of course the US as well. Okay, so we had both inflation reports coming through. Now, it was anticipated for my previous week's weekly market analysis, where I'd shown you that it was anticipated to be softer, and that's what exactly took place. So we had a softer US reading. Now, going into sort of the week ahead, so in addition to having a softer CPI data that came through, so it was anticipated at 0.2%, came in at 0% if you look at the month-to-month figure. The core CPI came in at 0.3%, softer than the 0.5% forecasted. So yes, the data itself came in much lower than anticipated, than expected, right? The rest of the week, going into Thursday and Friday. Well, Thursday, we had some PPI data that came through. So again, there was some weakness in the PPI data, but not significant weakness anyway. But most anticipated was, of course, the GDP figure that came out in the UK. So we had UK GDP figures, which also came out much lower than anticipated. Okay, so there was weakness in the GDP figure that came through for the UK. We have the University of Michigan, which did come up above the 50 mark, right? So anything above 50 is seen as expansionary, and the anticipation was 52.5. It came in at 55.1, so much better reading. So we're gradually seeing some positive outcomes coming out from the US when it comes to macroeconomic data. And we're not seeing the same reflection when we're looking at European and UK markets, right? But as I mentioned, the focus last week was entirely around the CPI inflation reports. Okay. Now, the concerns about inflation in the US was the focus, and it still remains to be in focus. And I'll tell you why. Because it seems like markets remain sort of on the fence at the moment, or sort of feeling a little bit fret or nervousness about what the Fed is going to do based on the new information that we've just received, right? So it seems that the markets are beginning to price in that the Fed will move from a very hawkish stance to a more neutral stance. right? That's what's being regarded at this moment. It seems like the markets are beginning to price in that they are, easing off its hiking plans in the coming meetings. And that can be seen by two methods. One, you're looking at price action. So by viewing price action, you can quickly engage whether, how the markets are positioning themselves. The second is if you look at the CME Fed tool, which gives you a probability-based outcome of what they expect to occur at the next meeting. So where it was assumed that there was going to be a 75 basis point rate hike in that September meeting, that's now come down to where the probability is substantially higher with a 50 basis point rate hike. Okay, so we've seen that easing off taking place of a rate hike by price action and by the CME Fed tool. So just looking at quickly through, I might come back to that in a moment or so. So those are sort of the two ways that we figured out, hang on, markets are beginning to now price in that we're moving from a hawkish to a neutral stance, right? So, it seems that there is still some volatility in the market. There is a bit of volatility in the market. It's creeping back into risk assets. But the key point to mention is we're sort of right at the front line, on the starting line between two choices to make, right? Between sort of two, paths to take, right at the start line of two paths to take at this current moment. And that's this is going to be a very pivotal week, if not few weeks, before we come up to the next Fed meeting. Yeah. Okay, yes, we have seen a lot of optimism, this renewed optimism coming through in recent weeks, right? Where we've seen stocks rallying aggressively and the US dollar selling off, right? Now, why is that the case? Well, clearly, right, all of this is on a repricing of the Fed rate hike expectations, with the market now believing that the Fed will start to ease up, right? And that was because of clearly this new soft CPI data is feeding into that narrative. Yeah. But the Fed members now is what is concerning the market, which hasn't been priced in. Do note, this has not been priced into markets. Every single speech that has come out recently of voting members of the Fed, right? So FOMC members, right? They continue to give off a hawkish stance. They give a hawkish speech, right? Which markets are not pricing in. They are almost ignoring this information and going on what the CPI data came through, right? Now, something that you must note at this point here, right, is that the inflation trend line, the inflation trend is still in an uptrend, right? Now, the question is this: even though inflation has softened, but inflation is still at a significant height at 8.5%, right? So even though it's dropped a little, it's still at 8.5%. So the question still is seen whether this recent CPI data, is it regarded as a correction in the overall trend, or we might see the next move higher coming through at some point soon, right? Or is this inflation actually topping out? Has inflation topped out and now we're on a downtrend, right? So, and that's where you could see, if the view is that this is, a blip or a correction in the overall trend in inflation, and inflation is going to continue to stay elevated at these, levels, then certainly you could see the markets roll off quickly. It might roll over slowly if we see inflation stay in this range. What if it just comes off a little bit and then stays at these elevated levels, right? Because ultimately, central banks, their mandate is to keep inflation at 2%. Now, if inflation is at 8.5% now, and it stays above 8% for some time, that's going to still have a stifling impact into equity markets, okay? So that's what we sort of now have to base where we see markets going forward, right? I might come over to the markets now, actually. So just have a quick look at the markets here. Is there an image that I wanted to share with you guys? Not at this current moment. Okay, so let's have a look. I might come on to that in a moment or so. Okay, just bringing this up at this current moment. So this is showing you all central banks, right? This is percent of world central banks hiking rates, right? So what we're seeing is this most recent tightening cycle that we've seen is probably the broadest and the sharpest that we've seen in history. And we're going back as far as 1985, okay? Now, the question is, have we peaked and are we beginning to see some of these central banks now come back to a more neutral stance? And just overnight, what we have seen is that the central bank in China, People's Bank of China, have gone on to reduce their base rate. Okay, so I'll touch on that in a moment or so. At the same time, what I also do want to show you is this here as well. So as of recently, what we have seen is the orange line is the one that you see in the SPX view there. And we look at the volatility index when we're looking at inverse volatility index, or when we're looking at this purple pink line. Now, clearly there is a divergence between the two, right? So there is a negative correlation between the two, as we've seen as of in this sort of box region here, right? So we're seeing VIX beginning to come off and making a new low, whereas S&P 500 has gone on to sort of make a new high. So the SPY, the SPX, is making a new high, and that's the sort of the crossover that we've seen there between the two, which is showing that markets are continuing with that bull theme, that bull market theme. Okay, so just move this out of the way. Right, so just looking through, as I mentioned, around the markets, one area to come back to, and especially right now, what is significantly important is the oil markets, right? So, oil and energy prices and sort of, energy as a whole, the commodities as a whole, is having an impact on inflation. Now we're seeing oil coming back to test those prior lows and now breaking those prior lows, almost sort of hitting those 88.50 figures. Yeah. So oil is moving back to those recent lows as mentioned here. And now, why has this happened? Well, a couple of key points here. China data overnight. Okay, so we had some China data overnight weighing heavily on the global growth outlook, and in turn will have an impact in the demand for oil. So we also heard news around Aramco. Okay, so this is the world's leading exporter who says that they are ready to increase their production levels if it is requested to do so by the Saudi authorities. Yeah. And these two types of news that we've seen is certainly driving the oil markets lower. So it was a bit of a surprise overnight hearing that the People's Bank of China have reduced their medium-term lending rate by 10 basis points to 2.75%. Now, China is struggling at this current moment. One, they have this ongoing zero COVID policy, as well as the fallout from their cash-strapped property developers. And now it's anticipated that they are likely to miss their official 5.5% growth target this year as well. So, and then we had this news overnight. So Chinese, and initially the Chinese equities overnight did rise on the news that they've reduced their base rates. But at the same time, when you've got figures coming through, one, they had retail sales come out, were just at 2.7% in July from the previous year. And that's well below the 5% forecasted. And then they had 3.1% in regards to the National Bureau of Statistics as well. So 3.1% miss there as well. So certainly we are seeing poor economic data coming through from China, where both now we've seen retail sales go down to 2.7% and industrial output also rose less than anticipated at 3.1%. And that's hit sentiment and that's caused that negative effect. And it's being, yes, that negative impact is being limited by the rate cut, but we still need to see the follow through of this as well, right? So yeah, oil prices certainly having an impact there as we see the demand weaken. The demand side is weakening. At the same time, we're seeing production levels might be going up, especially with Aramco recently outlining that they may increase the production. And yeah, well, we have this, potential on the cards this Iran and US deal to be discussed as well. So if the US reduce some of the sanctions and allow for a bit more Iranian oil to come into the market, again, those production levels increase. Demand is already beginning to weaken on the fears of a slowdown and a recession. Certainly, that's going to bring the price of oil down lower. Okay, so those are sort of the two key points that you need to sort of almost link. They're interlinked now, which is what's taking place in China and what's taking place with oil. And then you have the OPEC plus members and what US are doing in regards to encourage production levels, because their SBR sort of levels are going to diminish by October as well. So that comes to an end by October. Okay, so just looking at, going over back to the equity markets. If I come over to the weekly view, and what you can quickly see there is just looking at the Nasdaq and S&P 500, even if you look at some of the European markets, right, which are back to sort of, key levels here as well, right? So most of the US markets anyway are wrapping up another week in the green. So we're seeing now they've posted 4 straight weeks of gains. So it's 4 sort of, green candles so far. It's their longest winning streak since October. And, it's being boosted, as I mentioned, by encouraging data from the jobs market. So we had 2 weeks ago, the jobs data that came through, which is a much, optimistic view of the labor force, right? And then we had last week's inflation, a bit of a correction in the inflation report, right? And then to add to those macro views, we had microeconomic sort of, corporations outlining their earnings coming in a little bit better than anticipated as well. So it was regarded that 80% of reports that come through from the S&P 500 companies, 78% of them actually outperformed their expectations, which is fantastic. So an example of that is Apple. Apple are close to now turning this year into a positive one, right? So the rally that we've seen so far, the question is this now, is that are we seeing a bottom being formed and a now bull rally sort of in place, or is this a bear market rally? Okay, is this a bear market rally? Well, technically, if we're looking at price action, we are still in a bear trend. Okay, so some of the sort of views that you can sort of apply here, maybe if I adjust some of the technicals there, so if I take it from one high to the next high, include the highest points of the spikes themselves as well, we're not quite broken through the trend line as of yet. Okay, so that's sort of another key point to sort of add there. Going on to, if I apply the daily time frame, so you can see that quite quickly on the daily time frame. There is a key level resistance fast approaching the 4,300 figure as well for the S&P 500. You need to sort of keep an eye on. Looking at the Nasdaq, let me just hit refresh there. Again, we've had a more of a bullish outcome for the Nasdaq. So that has quite clearly broken through the trend line that we have in place, and that's a very strong trend line as well. So it's above all the highs there as well. But is there going to be a follow through? And we're quite quickly sort of approaching this sort of level of resistance here as well. So if I apply that level of resistance, about there. So that price ran 13,578 figure, which is what has been achieved up until this point now, is a key level resistance. Are we going to see a follow through, a break through this level is sort of a key question at this point here. You can see how this level has been previously sort of, highlighted as well in this region here as well. But that's quite an important one as we're sort of looking for a follow through when it comes to for US equity markets. Yeah. Okay, so the S&P 500 has not quite broke through that key level for trend line, but we have broke through that with the tech stocks, and the tech stocks are making a much larger comeback. And you can see that follow through also in the crypto space as well, right? So as I mentioned, equities and their earning reports came in much better than anticipated. The question is now that the next few weeks what I'm forecasting is that it's going to be the pivotal point, right? We're at that starting line and we're going to see two paths being formed, and which path are we going to go down is going to be based on what the outcomes are from the next few weeks. Okay, so as I mentioned, the next 3 to 4 weeks, the next two, or let's add in sort of 2 to 4 weeks. The next 2 to 4 weeks is going to be pivotal before we go into the next Fed meeting. Before the next Fed meeting, within this stage is going to be really setting the scene of which direction the market's going down. Now, why do I say that? One inflation report is not enough for the market to sort of see if we've stifled inflation, okay? If the peak's been put into inflation, we see now a new downtrend, or is this just a correction in the overall elevated inflation expected for the longer term? So, you know, the market needs to build faith, and build faith comes through with the more information that we receive, okay? So, you know, so whether we are peak inflation theory is being applied, it's going to be tested over the next few weeks. So not only will there be another read on the CPI index before the next meeting, so we've got another CPI index report coming out before the next Fed meeting. Yeah. But we also have 2 more reads on the PCE price index. Now, this is the number one indicator that the Fed uses to engage whether inflation is now starting to stifle, starting to it's hit the peak levels. Yeah. So that's something that you need to put into your market reports in your sort of trade plan, is keep an eye out for information that comes out in regards to the upcoming CPI data as well as the PCE price index, and those 3 are to be released, and that's going to sort of give us sort of the key points there as well. Yeah. The takeaway, I'll say, is what you need to add to that, in addition to understanding that we've got these 3 reads that are going to be coming out in the next 2 to 4 weeks before we have the Fed meeting, is what's going to help us indicate how the Fed are going to pivot. But what is also important is Fed speeches, right? I've already mentioned that the most recent speeches that we've seen is that they are still likely going ahead with a hike at an aggressive pace. Okay, so they are going with another hike of 75 basis points. That's what's coming across, rather than what was anticipated or is being priced in at the moment, that they are pivoting to a more neutral path, which is becoming more data dependent rather than just inflation focus, as indicated in Jerome Powell's last press conference, right, after the rate decision, that they have raised rates by 75 basis points. So that's what you need to sort of focus on there, is incoming speeches and upcoming CPI data, right? So the week ahead, what do we have in store for the week ahead? Well, if I come back over to the economic calendar, I will go to this week. Okay. So what I'll probably start off with is the most anticipated, which will be is if we move towards midweek, which is this here. So we have the minutes, okay? So the FOMC meeting minutes. Now, it's worth noting that this is minutes based on the meeting, the previous rate decision meeting. They had a 2-day sort of blackout meeting where they discuss all the ongoing sort of views of each Fed member and where they want to vote in regards to the interest rates. So we'll have more information from this minute. So this will be the main highlight of the week, is the Fed minutes from the July meeting. But just remember that this was the meeting which saw a 75 basis point rate hike. Yeah, so and then at the same time, they switched it to a view where Jerome Powell stated that they're going to go onto a more neutral level, right? They stated the word neutral. And we want to see how often that word neutral is being used in the minutes, right? So they also signaled where their forward guidance would be positioned for a more meeting to meeting basis. Okay, so they're not just focused on just the inflation scenario. They're going to be assessing what they do in regards to their forward guidance from a meeting to meeting perspective, and they're going to have more of a data dependent approach to rate setting. So the question is that going to be what's going to come across within the minutes themselves, or are we going to see the voting members all have more of a hawkish view than Jerome Powell does, right? So that's what sort of the information that we want to know. So it'll be interesting to see how this new approach was arrived by those members, and if there were a lot of dissenting amongst those members. Yeah, and we also want to know if there's any additional colors on where we are in terms of the rate hike magnitude going forward. How much, although those views are likely to be sort of already priced in, but again, they could indicate some information that we were not available or we didn't give too much relevance to from the last meeting. Yeah. Okay, so just be mindful of the FOMC meeting minutes that's going to be taking place 7 p.m. Wednesday. The next one is UK inflation. Okay, so we have on the same day at 7 a.m. instead of So we're gonna have inflation. So 12 hours prior, we're gonna have inflation, UK inflation report coming in year-over-year figure. Now this is gonna be an important one, right? So we've seen the US potentially have somewhere between they've either peaked or they are seeing a correction in their inflationary sort of figures. Now, is that going to be the follow through? It is unlikely. Okay, it is unlikely. The question is, are we going to hit double digits in this inflation report that's anticipated by to be released Wednesday at 7 a.m. So, even though we've seen US data showing some slowing in their CPI, it's unlikely that we're going to see the same in the UK inflation profile. As I mentioned, the question is, are we going to hit double digits? What is forecasted is a range somewhere between 9.8 to 9.9% is what's anticipated. The previous came in at 9.4%, but we could quite easily see a much higher number. Do note that most recently we had the Bank of England had revised up their forecast of peak inflation to 13%. So previously they mentioned up to 11%, but now they're giving us indication that it could even rise up to 13%. Right. In addition to that, the backdrop of what's taking place in the UK isn't so great when you're looking at political stance or the political view, as well as the Bank of England view, right? So the Bank of England, despite being the first in the G7 sort of nations to be the central bank to raise their rates for the first time, but they are remaining to be behind the curve. It seems like they're behind the curve in their rate hikes, where they've raised rates just at small increments, but only recently have raised it by 50 basis points. Okay. In addition to that, we're coupling that with the cost of living crisis, which is beginning to worsen as we're sort of seeing on a week-on-week basis, with elevated sort of energy prices and energy crisis that is coming through, and that's not being softened by what we're seeing as heat waves and hosepipe ban and sort of some of these other concerns that are coming through. And then to top that off, then you have what's taking place in regards to the two candidates that are looking to become the next PM, Liz Truss and Rishi Sunak. And even though it's going back and forth, it just seems that Liz Truss is way ahead. She is ahead in the most recent polls that we've seen. There are two polls that I'm focused on. Okay, now the first poll is by YouGov, and the second poll is by Conservative Home. Right. So make sure you do your research, right? And it's important when you look at these polls. Now we know it's going to be by voting by members of Conservative parties that are going to vote who's going to be the next PM, right? And they want a longer term view as well in regards to who will be the most likely to win at the next general election in a couple of years. So, there is this going back and forth hustings that are taking place, and that's being televised by a number of broadcasters. So just see sort of the difference between how they are both setting in regards to their policies is going to be very important to this inflation scenario and what we see taking place in the UK markets. Now, the cost of living crisis is at the forefront, especially given over the weekend. A lot of this sort of concern with the heat wave, fires in forests and hosepipe ban, and now we're seeing 30% inflation. It's all sort of leading into a significant cost of living crisis that we're seeing at this current moment. So yeah, just be mindful of that as well. And as I mentioned, we do have rate decisions by two other central banks as well, One's right there, so the RBNZ, so Reserve Bank of New Zealand, will be looking to raise their rates by 50 basis points. That is what is forecasted. As you can quite clearly see here, the previous was 2.5%. It's expected to come in at 3%. Okay, so we're seeing rate hikes continuing over in New Zealand. Okay, just have a look through. So we have monetary policy meeting minutes from Aussie, from the Reserve Bank of Australia, and just quite quickly looking through. Yeah, apart from that, I don't see much else. Okay, so I know that there is the Norwegian central bank is also looking to outline their rate decision, and that is also looking at another rate hike there as well. But yeah, we'll see what takes place in regards to that. That again, we don't trade Norwegian krona much, but if that's on your list of assets, then absolutely that's something that you've got to consider viewing as well. Yeah, that's it in regards to for the week ahead. Something else that I can quite quickly show you is potentially just looking at the Reserve Bank of New Zealand. That's what's happened so far. So the official cash rate was cut for some time, 2020 at this super sort of level, super lows, right, that we've not seen in some time. And you can see the rate rises, okay, gradual rate rises initially. Now we're seeing much larger 50 basis points of rate rises now taking place there, right? And something else to sort of top that will be is just coming over to US retail sales that are taking place at the end of the week. That's something that you need to be mindful of. And just the final point will be is this one here, which is the UK inflation and retail sales. That's something that you've got to consider, right? So retail sales have been sluggish this year as inflation looks set to exceed 10% very soon, right? And potentially topping 13%. So this is the biggest sort of view that you need to take for the week ahead is the UK CPI data, UK inflation data. We have the Fed minutes, the Kiwi rate decision, and some retail sales that you need to sort of price in when it comes to the US as well. Okay, that's it from me. That's another weekly market analysis wrapped. Thank you for joining in this session, and I'll see you in the next one. Take care. Bye-bye.